Hello everybody, I hope you're well, and in today's video I'm going to be covering the FTSE index, and I'm going to be explaining it for beginners and intermediates. So if that sounds good, please like and subscribe to the channel, share the videos and things like that. Please let your friends know if you're interested. So let's just jump straight into this. What is the FTSE or the FTSE? So this is a stock market index, obviously aimed to show the performance of constituents within said index. Obviously, constituents just mean stocks on that index. We talked about this in a last video where I covered what indices are. So obviously it's showing constituents of an index and the performance of those stocks. In this case, it will be the performance of the top, whatever number it is, stocks on the London Stock Exchange in the UK. So FTSE stands for Financial Times Stock Exchange, as that is the name of the company that created the index. So obviously, Financial Times Stock Index, you can see the two things there. And this is meant to show how certain pairs in the market are doing. So for example, we have the FTSE 250, 500 and 100. 100 is a more common one to trade, but there are also those two versions. So there are many versions. That's something to note because they are not all the same. So of course, like I said, these ones are most commonly traded, and they basically are a pile of so the ones that say 100, 200 and 250, so on, the number is the amount of constituents or companies on the index. So for example, the FTSE contains 100 stocks if it is a FTSE 100. 250 means it contains 250 stocks, and obviously 500 is 500 different stocks as well. So that means the amount of numbers is the constituents on the index. So how does this actually affect our trading? What does this have to do with our trading? So it's important to know what we are trading. That's why I've made these series about indices and forex and things like that in the future. So obviously this will help us to get a better understanding of what these things mean. So yeah, I would like to take some time to further explain each individual index, but we are going to mainly focus on the FTSE 100. But I am going to be talking about all of them, so you know. So one thing that's key is the indexes, all of those are weighted by market capitalization or market cap. This means basically the amount of equity a company has. So if it has a lot of shares and a lot of influence on the market, it will be higher up on the index. So if a company is more valuable, it should be higher up. So for the FTSE 100, this will mean that the top, say, 10 companies will have a greater influence and they own the majority of the index. So for example, if the whole index is 100%, let's just say like 25 or 35% is the top 10, maybe even more than that, probably more. I should have probably checked that fact, but you can understand that that will mean the market will be closer to following these top 10 or so stocks, depending on which one of the indexes you are trading, than all of the rest. So these will have a greater influence on the market. Like I said, focusing mainly on the FTSE 100, this is a variant of the index, is more commonly traded than others, and I'm going to go into the most detail on this one for that reason, because it is one that you can generally tend to find more often than the others. So this index of FTSE 100 split into 4 different sectors: oil and gas, that's one sector; banks, households and personal goods brands, also one sector; and healthcare. So that's each 4 sectors, and these give us an indication of what is happening in an economy. So obviously that's a topic for another video on economics. I will get to that one eventually, but that means so for example, if banks are doing well, interest rates might be higher or lower. If households and personal goods brands are doing well, that means people are spending more money, GDP shall grow, things like that. Or perhaps if they're not doing so well, it might be a sign of a shrinking economy in the future. Again, something for a different video completely, but there you go. So there's some basics on it. Key things to note about the FTSE 100. Despite being a UK-based index, obviously on the London Stock Exchange, 75% of the revenue actually does come from abroad. This means that the index, the FTSE 100, is a better indicator of the economy as a whole rather than the actual UK economy, because obviously with most of the money coming from different countries, it will have more of an influence based on what those countries are doing, and because they will affect the stocks in the index more. So the FTSE 100 may not be the best way to look at UK companies, So we might want to use a FTSE 250 or 500. Bear that one in mind, because their revenue is more likely to have a larger percent which comes from the UK. Of course, you can look into the companies if you want, but bear in mind the constituents of the index are chosen every quarter. Obviously, that's every 3 months. So this means that it can change from time to time. A company can get knocked off the index, so it can go from being 100 to 101, then it won't be on the FTSE 100 anymore, and it can also get added on as well. Other companies can obviously replace those companies, so it can climb up to this index. Okay, so timings are something to note, because this will show us the best volatility to trade. So the FTSE 100 starts trading from 8:30 a.m. to 4:30 p.m. UK time. However, some markets will trade outside these hours depending on what brokerage you're with. So bear that one in mind. You can actually trade outside these hours sometimes depending on how you're trading, but of course these times are generally the most volatile ones to trade in. So the FTSE 100 is generally affected by the US markets as soon as they open. Many indices actually are, because the US is obviously the largest economy. So that opens around 2:30 a.m. UK time, and also around 2 p.m. UK time. So bear that one in mind. That's something to note as well. So how can we actually trade this? So we can trade indices many ways. Obviously the FTSE 100 no exception. We can't actually trade these through actual stocks, because it's just an index. So you can trade things like CFDs, index funds, ETFs, things like that. So you can look into that one further, but do remember trading can be risky, and you should be always precautionate. So please do tune in soon for the next video, where I will be explaining the DAX, and I will see you soon. Thank you for the view.